Good morning, ladies and gentlemen. My name is Ryan Suter. I'm one of the senior investment managers here at Shareholders, and we're here this morning with Paul Serra. Now, Paul's the CEO of Ricegrowers. Paul's been kind enough this morning to lend us his time and expertise for us to do an interview. Obviously, I'm going to kick us off with a couple of questions of my own, and then we will open it up to the floor. So, ladies and gentlemen watching today, if you have any questions you'd like me to ask Paul, please submit them to the Q&A function on Zoom, and I will ask away. Now, Paul, again, thank you for your time this morning, mate. I'd love for you to kick us off just with a bit of an introduction of who you are, your experience, and then Ricegrowers.
Yeah, hi Ryan. Well, thanks a lot for having me on this morning. So good to have a conversation. CEO Paul Serra, Group CEO of SunRice, globally based in Sydney. I've been in the role now for about 14 months. Relocated from New York back here to Australia to take the position on. My background's largely been CPG, FMCG food industry. So started out with Arnott's Biscuits here in Australia, who were then owned by the Campbell Soup Company, and I spent essentially 20 years with the Campbell Soup Company, traveling across their markets here in Australia, Southeast Asia, broader Asia, and then the US. Starting out in supply chain, then moving more into sales, marketing, general management. After my career with Campbell in the US, I joined Olam International, which is one of the world's largest commodity and ingredient traders and manufacturers, and spent 3 years with Olam in Singapore before relocating back to the US to run their North and South American, or the North American businesses at the time, and relocated back to SunRice 14 months ago. So that's a little bit of my history.
Brilliant. All right, thank you.
11 years away from Australia, slowly getting used to it again.
Back into it. Love to see. Now, just to get straight stuck in, obviously, you guys shared some of your new strategy at the recent AGM. Can you tell us a little bit more about new strategy and what it actually incorporates?
Yeah, it's quite an exciting time for SunRice. I think over the past decade, the company has really transformed from what was initially marketing an Australian rice crop to the rest of the world to what is now a almost entirely value-added FMCG business. So we have sourcing of rice from all of our global supply chains across Australia, obviously, which is our heartland, but through into Southeast Asia, North America, and increasingly into broader Asia. So about 25% of the rice we source is from Australia. The rest is international from our network of owned mills, as well as from buying from the open market. And we value add essentially into microwave pouches, straight rice bags, into rice-ready meals where we're pre-blending spices to help consumers unlock meal occasions, through to rice snacks. And we also have our ruminant feed business here in Australia, our pet food business, as well as our branded CPG business here, which is doing brands such as Always Fresh and Toscano bakeries. So when we stepped back and we had a look at that transition over the past 10 years and where our opportunities lie, I think one of the great parts of SunRice is that over 50% of our sales comes from international markets, and we're exposed quite heavily to those international markets, which gives us the ability to grow in quite unique ways versus many other Australian-based businesses. So we have a really strong presence in the Middle East. We've been in the Middle East now for close to 50 years. We have a strong positioning through the Pacific and countries like PNG, but we have a really strong position in the US as well. So when we stepped back and we looked at what do we do well, where do we make our economic profit from, and how do we further grow, our strategy is very focused around rice. And we are a rice company at our heart, and we're a vertically integrated rice company at our heart. So we're able to bring right from the agronomics and the varietals that we grow around the world through to what are the consumer palates, what are the meals that we're trying to help consumers unlock, and what products and channels and occasions do we need to be focused on to unlock that. We're able to link all of that together, which is very uncommon in the rice industry globally. And so our ambitions is to double our ANZ business, which we can see quite achievable means of doing. Rice is quite an accepted carbohydrate through many different cultures. So unlike pasta or potatoes, which are quite culturally linked to certain meals, rice exists in almost every culture across the globe. And so rice really unlocks flavor and taste, and it's a better for you carb than many others that are available. And so we believe there's a huge opportunity to continue to grow in Australia. Our Middle East presence, as I said, is quite a significant one. And so our ambitions there are to double the Middle East and then develop a much stronger branded food business in the US, including our snacking products there. And so we think combination of all of that, we've got a very strong aspirational target, to try and achieve $3 billion in net revenue. And at the moment, we're at 1.88 billion as of the close of last financial year. So really exciting time to build on the strengths that we have, to get really focused and to really leverage the fact that we have good growth opportunities here at home, but fantastic growth opportunities globally as well.
All right, well, thank you for the update there. Now, obviously, you guys just recently announced as well the cessation of the New South Wales investing arrangements. Now, what impact is this going to have on SunRice?
Rice vesting has been an important part of the Australian rice industry. It's essentially meant that if you wanted to export rice from New South Wales, where 97% of Australia's rice is grown, then you have to market that through SunRice. And that was really to give SunRice the economics of scale in the export markets. Traditionally, most of the rice that we exported from Australia, if you go back a decade, was bulk rice. So it was unvalue added in 1 ton bags, sold into bulk markets, which essentially was a commodity that was traded at commodity prices.
Yep.
Over the past decade, we've moved away from that quite demonstrably into what is now well over 70% branded product. And that means that we're no longer trading into those bulk markets, and volume is no longer a point of differentiation. It really is our ability to differentiate with consumers and to provide what the customer and the consumer needs in the end market. And so when the New South Wales government announced their response to their investigation into essentially into the single desk, they proposed a partial deregulation, which was going to put more essentially put more regulatory compliance aspects onto rice growers, whilst partially opening up the industry for export. And we just thought at that point in time, it was better to work with the government to go towards deregulation. So we believe that over time competition will undoubtedly strengthen as a result of that. But as I mentioned earlier, SunRice is a really diversified company now with sources of rice from multiple different locations. And we feel very strongly that the value proposition we can give to the Australian farmer here in New South Wales is strong and will only get stronger in time. So we see this as a net positive of being able to really match supply and demand from the Australian rice into those premium markets internationally.
Okay. Now, you did previously discuss, obviously, your growth targets. Now, you are saying that you're wanting a repeating result for FY25 on the back of a very strong result for FY24. Can you just take us through, obviously, key headwinds and tailwinds for the business, and then obviously your ability to actually achieve these repeated results?
Yeah, Ryan. So like you said, it was a strong result. Last year, we posted a 15% revenue jump and an EBITDA increase of 23%, fully franked dividend increase of 20%. So, they're quite phenomenal numbers given the sort of economic conditions globally and the disruptions that are happening. So we're seeking to repeat that performance, and the headwinds remain largely the same as what they were in the last quarter of last year and coming into this financial year for us. So we've got conflict happening in a number of different places, and the shipping industry is quite disrupted as a result of that. In particular, our product going into the Middle East now is not able to go through the Red Sea, and so it's having to go around the bottom of Africa, which is adding a lot of time and shipping costs. And I think globally, people have seen that quite a lot with shipping rates going up to levels where they were, during the pandemic. And so that adds a lot of cost pressure, but also time pressure and complexity. We also see a lot of pressure in terms of cost of living. So consumers trading down to private label plays in more developed markets like Australia and the US. And that's a continuing trend, and one that we're continuing to innovate and bring new products to the market to combat. On the plus side, there are a lot of headwinds, a lot of tailwinds, as well. And like I said, the brand presence that we have in these markets has seen us continue to gain share in most of our major markets globally, and we continue to bring new products. So we feel very confident we can obviously repeat the strong performance, and with the growth strategy that we're working through finalizing, be very focused around where that future growth is coming from as well.
Okay, well, thank you for that update, Paul. Now, obviously, you just mentioned there there's a considerable lift in dividends off the back of FY24. Whilst obviously it's a matter for the board to decide. Now, is the quantum of the ordinary dividend repeatable on a guidance you get for FY25, or should this be expected to be a bit more of a one-off special dividend?
So we announced two parts to the dividend. There was a special component to the dividend given some asset divestitures that we had throughout the year, but the ordinary component of that largely is a payout ratio that was consistent with prior year. And whilst the board will make those decisions year on year, we're confident we can repeat the results as we've stated from last year. And the payout ratio is one that we'll consider each year, but the underlying business and the underlying cash flow generation of the business, as we said, we're seeking to repeat that performance.
Okay, well, brilliant. Now, you have, obviously briefly discussed, focusing on diversifying your product offerings, especially when you're shifting to different markets. Are there any major product offerings that you see being direct targets in the ANZ market for particular growth as opposed to the Middle East market?
Yeah, in the ANZ market, it's a really interesting one. We can essentially significantly increase our business here if Australian consumers ate one more rice meal per week. And it's quite interesting that between the average Australian family or couple that cooks at home throughout the week only has 7 to 10 recipes in their repertoire that they rotate between, and of those, only one currently is a rice recipe. Now, of course, heavy users of rice for who are ethnically predisposed to eat rice because of their cultural cuisine do so more often. But for a lot of Australian consumers, rice is sort of fried rice, and we see a massive opportunity here for us to broaden that repertoire for Australian consumers and help unlock that. So that's a little bit about recipe. It's a little bit about sort of activation and communication, and I think there are some misconceptions about health of rice, and there's a part to play there that we have to help educate consumers, and it'll partly be about products. And if I think about some of the products that we're launching, one of them being a risotto style rice where we have pre-blended essentially all of the herbs and spices, if you like, as well as, the stock into the product so that you can just essentially add fry your chicken to the side, add water, cook the risotto, put the chicken in, and you've got chicken and mushroom risotto, and it's a fantastic flavor profile. So things like that will also help unlock convenience for consumers in different ways so that rice meals can be consumed more at home. And so we believe absolutely with the health conscious focus of Australian consumers now and the time poor nature that there's a role here that we've got that we could significantly unlock rice occasions or rice meals in Australia.
All right, well, thank you for that. Now, I'm going to pivot here to a bit more of an environmental and sustainability focus. Now, how is Ricegrowers going about addressing increasing focus on sustainability and environmental stewardship that is now a bit of a core focus in your agricultural sector?
It's a great question. So we've recently announced that we've submitted our targets to the SBTi initiative for validation. We're still waiting for those to be validated, but that essentially signs us up to net zero by 2050. We were also one of the first Australian companies to sign up to what's called the FLAG initiative within that, which is specifically for sort of agricultural commodity-based companies around Scope 3 emissions. So if we really sort of simplify that down for us, what does it mean? Our Scope 1 and 2 emissions are essentially our internal emissions. We have very strong targets around sort of electricity conversion, and we're looking at all of our internal generation of carbon and what we need to do to offset that faster. On the Scope 3 emission targets, they're essentially due to the methane production in the growing of rice, and rice produces a lot of methane in its production, predominantly because it has a water blanket over the rice to act as a thermal insulator. That causes the organic matter in the soil to break down anaerobically. So we've been doing trials, and we're in the process of a double peer-reviewed study at the moment that shows we can very significantly reduce methane production by using a different total system of growing rice. And it's something we've worked on over a long period of time, but this has the potential to reduce methane production by well over 50%. So we're well placed. We believe in terms of meeting our SBTI frameworks that we've submitted for validation. And then in addition to that, we have the social aspects of what we're doing around basic living income standards, the modern slavery requirements across the globe, and biodiversity, which here in Australia is increasingly becoming more and more important. So very aware of the framework and the situation we find ourselves in. And we actually think there's a point of differentiation here that we can bring versus other rice companies to transition.
Yeah, brilliant. Okay, now just to touch on that again, obviously with SunRice, being in the sector that it is, when it comes to integrating environmental, social, and governance factors, how are you guys actively integrating this into your business strategy, other than obviously the ways you've just particularly mentioned?
Yeah, so we integrated all the way from board governance down through the organisation. So we obviously have very strong governance policies and procedures around this. We have a safety, health and sustainability subcommittee that specifically focuses on this from a board level perspective, but then all the way down through the management teams, we've integrated sustainability targets, we've integrated sustainability resources into our business units, geographies and functions. And so it's very much part of the decision-making process that we make from the ground up. And I think that's the only way that you can bring about substantive change in this space. You've got to have that top-down governance, but it's really important to have that bottom-up integration through each of the different levels of your organization. And that's something we've made huge progress in the last 12 to 14 months, and we're continuing to build out those resources, that knowledge, and the processes in our business to ensure it's integrated at every step of the decision-making process.
Oh, that's really positive to hear, Paul. Now, just one more from me, and then I'll pivot to some live questions. Now, you did previously touch on the impact of the Middle East conflict and global trade tensions there. How is SunRice assessing the impact of collective global trade tensions on its business operations and then subsequently its financial performance?
Yeah, it's another great question. I think the world has significantly changed post-COVID, let's say, and geopolitically, the world is in quite a state of flux at the moment. So we have quite a robust risk policy here. And as part of that, we assess the geopolitical risks to the different businesses that we have around the globe, as well as new business that we're looking to do. So each year we obviously do a significant amount of new business. And so as we think about new partners, new geographies, new countries, we put that through, which takes into consideration the geopolitical risk. It takes into consideration other elements such as modern slavery or cost of doing business in those countries and so on and so forth. We don't believe that we're significantly exposed, more so than where the world sits today. Now, obviously, if the world shifts quite significantly, then that can change for all of us. But again, as I said, we have quite a good, robust process in place to assess that risk.
All right, well, brilliant. Thank you for that. Now, we've just got one more to finish us off for the day.
Yep.
Participant asks, what are the risks to Australian rice growth from climate change and drier weather?
Yeah, so if you look at it just from an Australian specific aspect, so firstly, I'll answer it from a SunRice point of view. So from a SunRice point of view, we are geographically diversified across almost all major growing regions in the globe. And so when we saw this in California 2 years ago, we had significant droughts. We know Australia can go into drought. So we've made sure and we'll continue to strengthen our supply chain so that we can source the rice we need for our business globally. And I think that de-risks the earnings profile of SunRice quite significantly versus, let's say, 10 years ago. If you look at it just from an Australian-centric perspective, I think there's two things that are playing out that impact rice and impact rice into the future. The first is ongoing climate change, and that's something that's difficult to predict. And the second is government policy around water reform in the riverina districts of New South Wales and Victoria. And so the government announced last year further legislation to acquire from the open market available water, which will likely have the impact of increasing the price of water in Australia, which will make growing rice more expensive. And so this is where we think it's really important for us to continue to diversify into higher value products globally with the rice that we source from Australia, so that we can pay the Australian growers the money that we need to, so that it's economical for them to grow rice. And that's the impact really that both water reform and climate change will have. It'll mean that rice becomes likely to become more expensive to grow. The other major part of that is our breeding programs. And so we have recently brought out varietals that'll yield up to 5% more with less water. And so the combination of that is helping to offset that water cost as well. But yeah, good question. And there are ongoing pressures in the industry, but we also feel confident that with the ability to work with growers more directly post the sealed deregulation, as well as what I mentioned earlier, we can keep the growers growing rice here.
Yeah, brilliant. Well, it's really good to hear.
Because
Well,
we do actually grow rice. Sorry, we do actually grow rice more efficiently and with less water than anywhere else in the world. And that's not something that's actually well known. So the less rice we grow in Australia, the more the global emissions of carbon will increase, because Australian consumers will still consume rice, but we'll have to import it. So it's quite a strong industry.
Yeah, okay, wow. Well, Paul, thank you very much for your time and expertise this morning, mate. Before we wrap things up, is there anything you'd like to leave us with?
No, thanks for the conversation. Happy to answer further questions. Obviously SunRice, I believe, is in a really strong position and really well positioned to continue to grow moving forward, and look forward to coming back and chatting more as we achieve that growth.
All right, brilliant. Well, thank you very much, Paul. Thank you very much, ladies and gentlemen. Enjoy the rest of your day. Cheers.
Thanks.